This is Currying Spotlight, where markets make currencies and institutional navigate liquidity, risk, and infrastructure. Thank you for joining us on Currying Spotlight. Today, I'm very pleased to share the spotlight with Michael Chen, CEO of Zand Bank. Michael, it's great to have you on the Currying Spotlight. How are things on your side today?
Well, thank you very much. I'm joining almost from the morning, and then till now, we finished one of the panel, and then the other one actually is the interview for the medias. So far so good.
Yeah, I've been to your panels and it's very informative. I learned a lot personally. It's
Well, thank you so
tremendous.
much.
Yeah. Look, Michael, could you please tell us a little bit more about yourself, your role in the Zen Bank,
Yeah,
and how you come to involve in the digital assets?
sure. So I'm Indonesian Chinese, but I born in Tianjin and then follow the parents and moving around.
Right.
You mentioned about you're covering the Australia. In fact, I live in Melbourne for quite a while time,
Nice.
and then afterwards I've been in Singapore, Taiwan, Hong Kong, and then go forward here. Describing myself actually, that's I'm start from actually the technologists, financial engineers. I was in different role in the two different banks, management role and also the M&A. Before going to Stan, actually, I was in a very interesting position where actually I'm looking for some of the digital initiative innovation areas.
Yes.
Beside that, expansion in Asia Pac and also the how we can actually do more actually on M&A side. So moving to the Zand Bank, which is a back to the story 3 years ago, where actually the bank was in the digital retail bank.
Sure.
So honestly, I was not very interested. To the interviewers during the board, and then I said, okay, I signed up actually the bank provided that we can have some unique propositions. The reason is simple that the UAE has 10 million people, and then we have 63 banks. Why we think that actually being another retail bank could actually have a better market share in this context. Second, actually, is why you want to limit yourself to be single market if it's a retail. The third one is that why we can't actually think about even beyond, rather than to have some geography constraint, and then we can go even on chain that become borderless. In the bank, actually, I start with the CEO role, and then in fact, we are not doing only the banking, but in fact, we are doing also outside the banking, for example, like AI.
Right. Okay.
In the banking itself, is a full-fledged bank license. I can say actually it's not really called a digital bank. I would call it even new bank because we don't have a branch. But we are not really focused on like digital bank on the retail. We are more on wholesale B2B.
Right.
Now, the bank itself, we have TradFi side and also the DeFi side. Where the DeFi, I think we are well known in the market. We are the crypto-friendly bank, enable almost like 100% all the digital asset companies, no matter from crypto exchanges, broker dealers, liquidity providers, market makers, multi-asset managers, which we build a very complete ecosystem. The same time, actually, we have the blessing from the regulators and also the leaders in the UAE to issue the first dirham stablecoins, which is a local currency. We call it dirham, in the multi-blockchain. Right. We basically going live, in fact, this week.
Okay.
And then on top of this, we are the only bank having the digital asset custodian, where the private key and also the public key actually under the banking license physically actually in the UAE. We recently actually tokenized the properties with the Dubai Land Authorities, and then this is the first one actually, joint ventures with the government and also the private sectors, and to make a use case. Now, the success for these very depends on a few things, but I think the most success actually factors will be because of the Dubai Land Authority itself. The title deed is already in a token.
Right.
That make a lot of things easier. Right.
Okay.
So I think that is about actually on the DeFi side. And then on the TradFi side, actually, we are doing the B2B and also the B2B2C. We are pretty strong also on the payment side. And then we provide, corporate banking services, transaction bankings, global market, wealth, and asset management. This is in a nutshell what San is doing.
Right. So thanks for giving the insights of what exactly you guys are doing, been involving to, and congratulations with your recent launch as well.
Thank you.
Now, if we could move to the little bit more details. So if we could start with your custodian or custody offering. There are relatively new few custody provider who hold a banking license. Can you tell me why this matter to the investor?
Okay. As I mentioned about, we focus very much on the wholesale. That means the client we are having will be corporates, institution, NBFI, and for the wealth offering, that will be individual, right? Because we are the forefront actually on the digital assets ecosystem, we realize there are many cases where no matter it's a sovereign fund or actually it's a corporate, let's say they try to transact with the crypto exchanges, but they would still prefer actually to find a licensed regulated
Right.
institution to put actually the asset, right?
Yes.
Now, if the bank can custody the cash, I don't see the reason the bank why cannot custody also digital asset. Now, back to your point that why we choose actually to have the custodian license under the bank, I think this is a unique offering. If you're giving a choice that you put a more better credibilities under which is a highly regulated environment,
Mm.
and then to secure your asset, I will actually go for that options. You mentioned about also that there are banks having a digital custodian license. I think, if I'm not wrong, actually we are the only one with a banking license where actually we have a both key in the UAE, which is a uniqueness actually for the offering. You think about in the past, let's say you may have a key actually somewhere you don't even know because the cloud today can be anywhere, right? You may not feel the comfort because in case of any change on the regulations on the other side, you are not even aware. But if the investor choose actually to park their money in the UAE, you would rather actually to have your other asset also parked in the UAE. That actually are ourselves a kind of a differentiators, compared to the competitors.
We will focus a little bit more on the UAE later, but I want to take a step back in terms of the tech, the tech stack. So, is your tech stack self-developed or using an underlying infrastructure provider? And could you give us the details on the tech stack and give us some information on what kind of infrastructures you guys, the custody offering, things like MPC, multi-signature wallets, etc.
Sure. Maybe I take the last question first, right? We are offering both, right? So it depends on whether it's a retail user or the wholesale users.
I see.
If it's a wholesale user, actually we're using MPC, right? And then this is a more preferable methods by most of the corporate because one of the key sign out may probably require from the corporate side,
Yep.
right? And then you will have, let's say, the level 1, level 2 actually from the banking side depends on the size,
Okay.
and then you have a different actually setup on the authorities,
Yes.
right? If in case of actually the omnibus wallets, where actually the retail use, the requirement can be very different.
Yep.
You can think about actually you are the super apps where your objective is to have the fiat wallet. At the same time, you want to have the omnibus wallet actually on the crypto side.
Yep.
Usually, when we have a client like this, they have certain actually digital assets the business plan. For example, they will allow their user to buy crypto, for example, right? They may allow them actually to save, to store actually their token as well. In terms of the safety nets. So we have these two different propositions, depends on actually the segment, whether you are the wholesale or whether you are retail. Now back to the tech stack, right? Zen actually always trying to leverage, the best in class technology.
Sure.
And then in the multi-sig side, we are using actually a Swiss-proof vendors who is being used by the tier 1 bank in the Swiss and also in the Europe. We strongly believe actually this brand can actually bring a lot of value because today it's no longer just talk about the securities on your infrastructures. It's a matter of the threat spring from the quantum computing.
Yes.
It's actually the hits on the AI agent where it can hack you like a milliseconds, right? You have to prepare.
Yeah.
Now, the other part actually built by the bank is the rest of the infrastructures, because you can imagine, for example, like how you can do the interoperability between the different wallets, and also how you can link this with the execution layers, and how you can link this with the settlement layers, right? How you link to the accounting system, and then how you can link to also the different client for the different purpose. This part is a highly tailor-made. I'll give you one example. For example, we are launching a crypto payment gateway,
Okay.
where crypto payment gateway actually on the back is the pricing router.
Yep.
Where this pricing router actually depends on the wallet, right? And then it depends on is the multi-sig or is the MPC, and then the treatment can be different because your checkout key can be different as well. So that's why we have always not limit to the custodian tech stack. We always trying to find the best and combine also the secret recipe for the bank, and then to combine together with our own tech stack.
Right. Okay. Understood. Interesting. Okay. Now, tell me a little bit more about the type of your clients. What type of clients are you seeing interested in your custody offering, and particularly what quality of custodian that your clients, telling that they are attracting to? Yeah.
That will be definitely actually the large corporates, governments, sovereign funds,
Okay.
where actually they care very much. They're still using very institutional approach. You can think about when you're trying to choose a custodian, let's say for the your bond, right? Your choice is quite limited, right? And then so usually we talk about the top 3 in the world, but again, these top 3 in the world usually is outside your home country because they dominate the whole market. Now the thing changed because of the digital asset custodian. There's a trend actually that will be offering direct by the bank. So it depends on your proposition. So our case, we have private key and public key inside the bank, key hosted in the UAE, that make us actually very unique, to the government sectors, sovereign fund, and also the corporates. And depends also very much on the tech readiness on the corporate. And then so we being asked always that whether we can have a direct API integrations. So you think about it, when you have actually a very remote cloud in somewhere versus your cloud actually onshore with the corporate, they always prefer the one closer to you.
Yeah.
Right.
Okay, understood. Okay, no problem. Look, let's move on to the payments. So it's very interesting to hear about your AED-backed stablecoin. Could you give us some more details about on its constructions, how the main process works, and what the underlying assets are, and if any? Yeah.
Sure. Um, there are 2 parts on this. First, actually, is the regulation driven.
Sure.
In the context of the UAE, it's actually follow the so-called payment token regulations issued in the Q3 of 2024. Now, you mentioned about that, your number one, it has to be fiat-based, 1-to-1,
Okay.
right? Number 2 is that the reserve management requirement has to be 50% actually on the cash, and then the 50% so-called in the most liquid asset.
Yes.
In the context of the UAE, you can imagine it's like the T-bills equivalent in the US, and then they have a money market built, right, less than 1 year. The strategy for the Zand Bank actually is that it's not only the 50%. In fact, we go beyond the 50% because this is a new to the market. We believe the most liquid actually asset is due to cash for the moment.
Yep.
When actually that's a mature enough for the market, actually we will do the rebalancing between the cash and the T-bill equivalents. But of course, I mean, we have to follow the baseline, which is 50%, 50%. Your other question is regarding the mean mechanics.
Yes.
That also depends on the regulations. So the regulations is we are the bank issuing the dirham stablecoin. In fact, today UAE is preferring the bank will be the issue for the stablecoins because number one, the bank actually is a follow the Basel. I give you a very practical view, right? The stablecoin in the US were not issued by the bank under the Basel III regulation. In fact, you are quite penalized if you hold the stablecoin because we are talking about the risk weighted is 1,250%.
Right.
So that means if I put actually 1 dirham, that will means actually that you have to do 12.5 dirham as a capital consumptions.
Yes.
That become meaningless. I think UAE has the visions, and then they think that actually that the Basel, despite the Basel is not re-adopt yet, but I think based on the Basel principle on the assets classification, especially on the collateral, is depends on the stability, liquidity, and also the legal enforcement. Now, if the coin actually issued by the bank, it means actually that you are regulated. Stability because actually you pack with the fiat-based, especially on cash and also the liquid money market bills
Yep.
from the government. So that means actually you are also liquid as well. Number 3, because of the legal enforcement, which is actually the bank being regulated. So that's why actually it fulfill all these 3. By fulfill these all 3, that means actually your Basel risk-weighted requirement will be 0%. That make the whole thing very interesting because actually I take the cash collateral,
Absolutely.
my
Yeah.
capital consumption will be no, 0, right? So that's the reason.
Yes.
So the main process actually is a very straightforward technical point of view. The bank actually is required to set up the subsidiary, which is 100% owned by the bank. We call it Centrus, where this is the only distributor for the Zand Bank to distribute the stable coins. Second, actually, that's we have the direct mint and burn,
Yep.
the mechanics, where we offer to the, let's say, substantial clients, where they commit the volume, and then we will allow them to do the direct redemption, for example.
Okay. Okay, understood. Look, if someone, I have a practical questions for you as well. If someone wants to off ramp, would they have to run a minting process, or is that only available in the secondary markets?
I think it's a very good question, right? Again, we are doing the wholesale, and then we are not doing really the on-off ramp by ourselves. So there are 2 parts: primary market and secondary market. Secondary market, that will be the ecosystem we are having today for the crypto. For example, you have the broker dealers, you have exchanges, and then you have also the LP who can pre-subscribe some of the stablecoin from you, right? This is actually the natural growth based on the market adoptions. Now the primary market actually depends on the usage, right? we can actually think about to buy actually stablecoin as a reserve, right? But unfortunately, because today the yield bearing is still not allowed for all the stablecoin in all the jurisdictions, but I believe a interesting debate in the US can change the whole pictures, and then we will see
Yep.
how it goes.
Yep.
Primary market can be also, the substantial actually FI, where they choose to rely on the third party minting capability of the stablecoin rather than you do the stablecoin yourself, right? You think about a country have only one currencies, and then some country, whether the currency is a deliverable or not, you will have the onshore and also offshore. For example, China,
Yep.
you have the onshore renminbi, which is a CNY, and then you have the offshore CNH. So I think the strategy for the UAE is still the same, where actually we have a single currency pegged to US dollars.
Sure.
Now, whether actually the private sector will have an interest to issue their own stable coins is really the private sector's decision. But in my point of view, having a stable coin actually doesn't mean that everybody has to make it, because it's a matter of how to use the stable coin for your use case.
So let's talk a little bit in terms of peggings. So what involvement does Zand Bank have in managing, mitigating, potential depegs? Or will that be handled in the secondary markets? Or
Yeah, the mechanic actually will be the same, because the stablecoin, if you think about back to many, many years ago, US already have a stablecoin. It just today, what dominate is mostly actually the two, right? There will be actually many methods to mitigate actually the depeg risk. Number one, the benefit for Zen Trust is backed by the Zen Bank itself, so the strong balance sheet and also the capital and also the regulations. Number two, actually we appoint also the market makers
Right.
who facilitate and also to regulate it actually in case of any depeg risk.
I see.
Number three is that actually we believe that actually strong demand, which is actually outside the crypto exchanges as a PayFi settlement token, versus actually in the crypto behavior where actually they use it as a media to buy the target digital asset. I think all this together actually will bring the market more regulated.
Yeah.
And then on the other hand, actually that's when there's a bigger market adoptions, for example, like cross-border trades, and then there will be not only the digital asset ecosystem, but also the corporate will adopt more. And then when you bring more liquidity depth, itself actually depeg risk will be minimized.
Okay. So I guess that answer my the next question, sort of like why did Zand Bank choose to enter the secondary the stablecoin market, but what's the difference value propositions compared to the other stable coins? So yeah.
Um, I will talk about in a few aspects.
Yeah.
Number one, UAE again is a very unique proposition because it's pegged to US dollar. $1 equal to 3.673, 3.675.
Okay.
If you look at the mid rate, actually is a US dollar,
I see.
right? Second thing is that the dirham itself actually is quite commonly used within the GCC because it's all pegged to US dollar except for the Kuwait. Number three is that for the Africa market, they used to accept actually US dollar, but also the dirham because of very tight trade relationship between the Africans and also UAE.
Yes.
That's a reason by itself why we want to make a stablecoin. Now, how we compare the dirham stablecoin versus non-dirham stablecoin, I think that's obvious
Right.
because you have a certain advantage that only happen in the UAE.
Yep.
Now, second, how we compare ourselves with the other dirham stablecoin, I think there are a few applicants right now in the pipeline. And then we are the first one in the multi-public blockchain.
Okay.
And then I think this brings us another, competitive advantage to have
Yes.
the first mover advantage, to the market. I think in the market, actually, there are a few different thinking process regarding the stablecoin. Number one is that private chain versus a public chain. And then we are more on the public chain side because I think the use case is not limit and should not be limit. If in case of the limit, that should be the CBDC rather than you have a stablecoin. Number two, if you go for the private chain, actually, unless you are very big ecosystem by yourself, example for the trade finance, you have to be the importer, exporters, the shippers, warehouse, the correspondent bank on the both sides to be one ecosystem. Otherwise, actually, even one miss, you can't really using the closed loop, right?
Yes.
So that brings us the strategy to have a multi blockchain compatibilities.
I see. So, talking about the AED, so that obviously the stable coins have been denominated in the AED will obviously be relevant to the Middle East, right? Do you think there is a narrative for AED to become a alternative to the USD, US dollar, similar to how some G7 currencies are alternative to the fiat USD?
I start from fiat, right? So if the fiat still cannot 724, then the people will choose alternates,
Yes.
right? Now the second is that whether actually the dirham is trying to sort of depace actually the US dollars, I think it's not.
Okay.
You can imagine Today, if we're using the US dollar for the trade finance world, it's not really solving actually the problem for the both side, because you think about if the importer exporter, they are not really using US dollar as a local currency. At the end, actually, you have to convert back to the local currencies, right? It's not a matter of whether it's a US dollar fiat or it's a US dollar stable. Now, in my personal belief is that if you have actually stablecoin under two countries, you really solve the 724, because on both sides you can do the min and burn.
Yes.
At the end, you are also doing 724 because you connect to the real-time payment system, right? You don't wait for the bank open again, on the next Monday if it's actually fall into the Friday night, right? So that's why I think it's not really replacing, but actually is trying to make it more efficient. The second point is that why I'm saying that it's not replacing, because you think about it, is today we have so many countries in the world. It's not all the countries trying to launch a stablecoin strategy. So for those countries not having a stablecoin strategy, it still remain a US dollar in that case, right? So I think it's actually is make it more complete in terms of the settlement system,
Right. Okay.
by using the stablecoins.
Now, regarding with Zand's tokenization activities, what kind of properties will be included?
It's regulation driven, right?
Okay.
UAE today is mainly led by the different innovators, where the regulators and also the UAE leaders trying to make it happen. The first case happened actually in Dubai, is powered by Dubai land authorities and also the partners together to make a success. But why actually Dubai is easier compared to the other country be successful? Because the Dubai land authority actually make a very unique implementations. Number one, Dubai Land Authority is already blockchain enabled.
Okay.
Number two, the title deed itself is a token.
Yes.
So that saves a lot of problem. You think about if in case of, let's say, I try to tokenize a property, let's say in a country X, where actually the title deed is still paper-based, that means the only way you tokenize it is through the SPV. You didn't really solve the problem because legal cost is still very heavy. On the back room, they're still using a paper and then piling up paper because of the changing of ownership, right?
Okay, thanks for that. Would the tokens be single property or contain a portfolio?
Well, I mean, I think the institution view and non-institution view can be very different, because it's quite penalized if you take actually the non-liquid assets, non-stabilized asset. I mean, to be the collateral if it's the tokenized, the real world asset. I think we need to take a step back, right? First, why we think about we do the RWA in the first place, right? There are many myths we talk about. Having RWA will increase the liquidity. No, I mean, if I try to sell the chocolate with box versus sell the chocolate by one piece, doesn't mean you sell one piece is better than selling one box, right? So it depends on the investor's appetite in the first place. The second thing is that, the asset itself, what does that mean to you? If the chocolate box actually costs me 90% of my wealth, and then I'll rethink about it, right? But if this 90% of my wealth can be actually, used as collateral by my friends, saying that, you know what, I honor this 90%, I pledge actually the cash to you, that's great. Now, the illiquid asset actually penalize a lot for the institution, because the example I give it to you, if it's non-liquid, non-stable, actually it can be go to 1,250%. That would be the purpose, the RWA, if it's being used as the tokenized product. But also depends on what product we're talking about. If it's in case of the tokenized gold, that will be very different. Number one, actually gold is not only stabilized, volatile, but also in uptrend. Number two, actually that's liquidity has enough depth, because it's a very popular one of the investments asset class by the many others. And number three, actually is legally enforceable. By that sense, it take actually 2.5 box. And then in terms of the Basel risk weighted that will be the zero consumption for the capital. So that was still very popular. I think depends on very much actually the liquidity, stability, and also the legal enforcement on the asset class.
Could you expand on the mechanics of pricing, right? So how will the underlying valuations process be made available to the investor?
It's like how you price a bond versus how you price a cash, right? Now the cash is more liquid and then pricing almost like 100%. Now the bond actually depends on the nature, right? The maturity, the yield, and etc. So I think the answer itself actually is not unique to the pricing model. Pricing model driven by so many things. Number one, actually popularity, liquidity, actually on the asset class itself. If we talk about, let's say, a tokenized gold example, and then I think that will be highly adopted by many others, the price would be actually more transparent and more with liquidity depth. In that case, the adoption will be quite easy as well. Now, again, actually, if it's not that liquid, the pricing can be verified. You can see the bid ask rate probably will be, it's like a stock, let's say, which is less popular in the stock market. You can imagine that not even actually the bid ask spread, but even no transaction for the day, right? So I think very depends on the investor appetite and also the liquidity depth on the asset class, and versus actually that how you can bring the things to be more investors, participant. For example, bring on chain versus being off chain. Of course, doing the on chain, if it's a popular asset during the weekend, that will be the only way to access, so the people actually will buy it. That echo actually what you mentioned about in the very beginning, that is a tokenized stock. Now, I think that will be also debatable because tokenized stock, whether actually the stock, the token owner actually will have the same right as the stock itself, right? So I think right now it's a debate. And also actually there's a debate in certain country whether you should actually fulfill the same as the SFC requirement on the tokenized asset itself. Let's see, that will be very interesting when the Genius Act, when the Clarity Act actually got more clarifications in the coming few months. And also, depends on also that's whether the bankers can win, not to allow the euro, on the stablecoin. I think for the coming few months, and it will be very interesting developments on this field.
Excellent. Thank you so much for your time, and thank you so much for your the early on the panels, and yeah, I look forward to speak to you very soon.
Thank you so much.
Thanks for your time as well.
Cheers. Thank you. Thanks.